The Asian tigers, caught up in their own giddy growth, paid little attention at first to the move by the G7 high rollers.
The problem is that as the dollar appreciates, those countries without currency have to ride with it too.
The dollar began to rise. As it did, the Asian currencies pegged to the dollar rose in value too. And that meant the country's exports became more expensive in the global market. Sales began to fall, and deficits began to grow.
In early 1997, investors like George Soros and the hedge funds, who have a sharp eye for instabilities building in the system, focus on Thailand and begin betting that Thailand is going to have to devalue its currency because it's borrowing too much money. And so they start betting that there's going to be a currency devaluation at least, if not collapse. And of course, the fact that the big money starts betting against the currency often has the effect of fulfilling the prediction.
There is a very rational process going on in the financial markets. It goes kind of like this. I know I'm not that smart, but I know Soros is, so I'll watch what he's doing, and I'll go along for the ride.
Soros is shrewd and powerful, but he can't move the system by himself. His power is amplified because all of these major banks, the ones in Wall Street, the ones in London, Frankfurt, even in Tokyo, are putting chips down on his bet.
As the betting escalated, the Thai currency, the baht, literally came under attack. Now, the Thai government was forced to buy more and more baht with the dollars it keeps in reserve, essentially paying off the speculators who wanted to cash out.
Mike, what can we buy? What can we buy, Mike? It's my question.
Each and every one of those transactions is pulling money out of Thailand and bringing it back to the United States, putting downward pressure on the Thai baht.
And the Thai government has to then spend more of its reserves to prop the currency up, and eventually it reaches a point of exhaustion, and then you get a crisis of collapse. And that was the trigger for all of the events that followed. But it wasn't Thailand's fault. It was simply happened to be in the crosshairs first.
As the assault on the baht intensified, the government turned to the International Monetary Fund for help.
What was the name of the game for good doctoring at that point? It was to calm the nerves and prevent panic.
Jeffrey Sachs is a Harvard economist who has become a leading critic of the policies pushed by the U.S. Treasury and the IMF. He calls the IMF the typhoid Mary of emerging markets.
The IMF came in, as is their wont, and I think the U.S. rhetorically added to this. And the IMF took one look around Thailand and said, this place is much worse than anybody thinks. We're going to clean it up. 58 finance companies, we want you to close right now. All of a sudden, people started to look around and said, I don't know what's going to happen in Thailand in 1998, but I know in the second half of 1997, there's not enough to pay us all off, and I want to be the first one out.
What happens when a currency like Thailand's cracks is that everybody who didn't see it coming suddenly turns white with fear and runs for the door. I mean that almost literally. Their first impulse is to get out. Because they're all trying to do that at once, that drives the currency or the stock market or whatever down even further, more dramatically, and very quickly, in matters of hours or days.
On July 2nd, 1997, the government in Bangkok lost its battle against the speculators and ran out of cash. Within weeks, currencies tumbled, capital fled, and governments began to tremble throughout the region. First Malaysia, then on to Indonesia, and by the end of the year, South Korea. As in every financial panic since the 17th century, one investor said, greed had turned to fear.